Inside Property. Behind the scenes insights with Australia's top property market influencers and commentators.
Okay, everyone, welcome to Inside Property. Phil Tarrant here from Smart Property Investment. This week, I'm joined by Victor Kumar, Director at Right Property Group. This is my chance to get behind the stories. And as a journalist, my job is normally picking up the phone and speaking to people to try and help shape and craft the content on Smart Property Investment. Victor's one of those guys I turn to pretty regularly. Victor, how you going?
Good, mate.
What's going on right now? What's the market? We had a chat the other day and you were telling me that there was 100 plus people going to a open for inspection somewhere in Sydney. Why are so many people in the market right now?
Look, I guess it's a confluence of a couple of things. First off, we've got the end of the year looming up, so a lot of people trying to catch up with their New Year's goals, even though it was derailed with COVID. We've got less properties on the market, less quality properties on the market as well. And the lending is very easy as well compared to, say, a year ago. And given the lower interest rate, the affordability factor has kicked in. So it's created that market influx where there is a lot more inspections. And also the weather is good as well.
Yeah, well, it's pretty hot over the weekend here. I don't know if I was going to go out in 40-degree temperature looking at houses, but let's be frank, right? If you go to an open for inspection, there's 100 people there. Do you just turn around and go the other way?
Absolutely, because it then becomes a bidding war in itself. Because obviously, when there's so many people vying for the same property, it will definitely go at the top dollar.
So there's a whole bunch of stuff on smartpropertyinvestment.com that are around auctions right now. And if you tune in, I speak to Tom Panos, one of the best auctioneers in Sydney, talking about this. He's had pretty good results recently, like prices going for way over. So as a property investor, as you run up to Christmas, like we've bought some good stuff in Smart Property Investment running up to Chrissy, but if there's that many people out there, should you just give up this period of time? How do you find good properties in this market if there's so many people out there hunting them?
Look, I think the first thing is that you need to understand what really suits your portfolio and what is it that you are looking for, and create those relationships with the agents so that you are first in line. Now, whether it is directly with the agents or with industry players that can put you in the box seat, that's the secret of getting to properties before the rest of the public in today's market.
And there's a lot more people out there in the market right now. There's stories here on smartpropertyinvestment.com.au around access to finance being so much simpler and easier because it's cheaper. There's still some hurdles there. APRA's relaxing some of the rules around serviceability. And then as we move into March of next year, when they change the responsible lending criteria, there's going to be even more people in the market with less properties potentially for sale. So
that's right.
It's only going to get harder. So tell me about responsible lending.
Well, basically, right now, the banks need to assess whether the loan is suitable for you in terms of eligibility. They need to look at your actual expenditure. One of the changes that are coming in, and there are a few changes coming in, one of the key changes that are coming in is the reversion back to the HEM method, which is the household expenditure method, where there is a benchmark that is given, and that's taken as being your weekly expenditure, as opposed to having it tiered against your income. So the higher your income, the higher is the expenditure. In effect, say someone that's qualifying for only $500,000 right now is likely, if these changes do come in, qualify for around 570. So that is a significant change in lending capacity. And that combined with, in some key states, the change in stamp duty or imminent changes in stamp duty will create that greater push in terms of eligibility and suitability of property.
So talk about the health of the market. As we hit COVID, there was a whole bunch of people. The banks put in place 6 months deferrals on loan repayments. There's a story here, falling loan deferrals prove market recovery. This is from REIA. So this is going to even further compound it. So all those people who are potentially in financial distress or wanted to have a bit of a buttress for changes in their financial health went on loan deferments. That's all come back now, isn't it?
Yes, it has. And I guess initially when COVID hit and the banks were offering these deferrals, a lot of people did take it even though they were not needing it then and there, because it was just mitigation for what could have happened in terms of their jobs and all that. And as time elapsed and JobKeeper and the general measures and employers were able to retain their employees, the need for the deferrals was no longer there. So we've got that natural fall off. plus the fact the incentives that state and federal governments are putting in terms of creating more employment and also supporting people that have lost their jobs, has certainly helped wean people off that, along with the lower interest rates as well.
So another thing that's compounding or making the market even more complicated in terms of attitude towards wealth is sentiment is increasing, money's getting cheaper, money should be easy to borrow. With your colleague 2 weeks ago, Steve Waters, we hinted that there will be changes to New South Wales stamp duty, which happened literally an hour after we recorded.
Yep.
Stamp duty change could increase real estate prices in New South Wales.
Absolutely, it can. And
is it going to happen?
Yeah, it hasn't come through yet. We are still in public commentary phase at the moment. But it looks like it'll all come in June next year, which, like any government change, any financial change, the market reacts accordingly. So that'll certainly lower the barrier of entry into property market, where you've got the choice of paying upfront or paying ongoing. And in itself, it's a good thing because it allows people to get into property market.
This is like the challenge I have in managing the smart property investment portfolio, whether or not I'm charging too much for my rents versus where the market sits right now. A lot of the conversations, Victor, I've had with my property managers is there are more people lining up for properties than what there is available. Therefore, it's upwards pressure on rent. What are you seeing, ground truth right now? Should investors be looking to jack up their rents in which particular markets and by how much?
Yeah, absolutely. Now, one of the first things that you need to look at is, you don't put up the rents at the risk of losing your tenants. So if you've got a good paying tenant, perhaps it's okay to leave it as it is. However, the key thing is that if you leave it for too long and you don't make those incremental increases, you'll be way behind the market in a year, 2 years time. So always jump on the net, see what other similar properties are renting for right now, and challenge your property manager to say that, what's the best rent you can get me without losing the tenant? I would strongly urge, though, you need to be ethical about it as well.
Yeah, absolutely. And we've got another minute or so, Victor. What's been the sort of key emerging theme you've seen over this last period as Australia becomes open again? Borders are opening up. Victoria is now open. Border is opening with Queensland, etc. What are you seeing in terms of property markets, and what makes you positive about property rather than negative about property?
Look, I don't think it's much to do with the border reopening. It's more the internal movement within the state that has had a more significant effect. Of course, I'm talking about Victoria, but certainly the opening of borders combined with the lower interest rate and return of mobility is increasing the number of transactions interstate as well.
And there's a story here on smartpropertyinvestment.com.au. Melbourne overtakes Sydney as the busiest city for auctions. And this is this week, Victor, hosted 894 auctions over the past week, overtaking Sydney as the biggest capital city. A lot of this pepped up demand, isn't it?
That's right. And remembering that it was under lockdown, so a lot of the auctions couldn't happen. So it's catching up to what was already in the pipeline as well.
Nice one. Well, Victor, thanks for your time today. If I don't see you on Inside Property before Chrissy happens, hope you have a good Christmas and all that sort of stuff. We'll get back again soon. This is our way just to really get behind the news and what's getting behind the content that you see on smartpropertyinvestment.com.au. So very much this is my job as a journalist. I ask people like Victor questions to see what's going on. It helps us shape what we write about. So I hope you enjoyed that. I remember smartpropertyinvestment.com.au. We'll see you again next time. Until then, bye-bye.